I know at Jane Street you mentioned you worked a lot with like ETFs and Jito, by many accounts, is sort of getting into the ETF game, whether that's through Jito Soul or through being, I mean, in we'll just say in some way, whatever ETFs look like, Jito being a very core infrastructural piece of Solana will be involved. Um, but there's also this new thing that's hot and sexy in crypto land, which is the MicroStrategy play, which is, hey, if investors want a regulated wrapper to get exposure to the price of crypto, instead of doing the ETF thing, why not just have like a company that does something else, but then the whole treasury owns a bunch of Bitcoin or Solana or whatever it is. And I mean, notably on Solana, we've seen some really well capitalized examples of this. So I'm just curious to get your takes on ETFs versus the MicroStrategy spinoffs.
I do think the value prop is very, very, very different because well, and look, I'm not an expert on this, but the way that I understand, the value prop for these kind of leveraged Solana plays is they are raising debt. They're using that debt to buy Solana with the intent to, as the value of the treasury grows, it allows them to raise more debt, which allows them to buy more Solana. And so the early buyers of one of these companies essentially gets some sort of increasing beta to Solana versus fixed income rates versus financing rates. Which looks a lot to me like kind of a leveraged Solana play. And to the extent that they can get financing at their prime broker, this might be an efficient way for them to do that. An ETF is very, very different in the sense that there are lots of protections that exist within ETFs in the sense that if something were to happen, well, and it depends on the exact structure, whether it's a grantor trust versus a 40 Act versus an exchange traded product, which is essentially a note, and that structure is very popular here in Europe. In the sense that, like, ultimately, if you were buying an ETF, you were holding a claim to Solana that can never go below the value of Solana. Whereas if you buy some sort of levered kind of treasury play, like it's just you're buying equity and you don't have a claim to the underlying assets. And in fact, equity holders are going to be junior to the bond holders. So the equity could go to zero in lots of different scenarios, not just Solana going to zero, but also like the value of the Solana going below, or the yield that they can get from Solana goes below like the cost of financing, the bond. Like if they can't meet, a coupon payment because they can't liquidate their Solana fast enough or whatever, it's just a different risk profile. And, to the extent that crypto people are kind of very risk tolerant, then, maybe that's a good way to do it.